Then political pressure started to build, and in the last few years, under extreme public finance pressure, politicians have started to pay a bit more attention to this. I was going to talk a little bit more about that later on if I can. I want to just explain a little bit more about the background. I want to talk to you about this whole thing about how transnational companies have reconstructed themselves, literally reconstructed themselves to take advantage of tax avoidance. They talk in fancy terms. Here's Ernst & Young, one of the bigger 4 accounting firms, talking about supply chain planning, first principles, and they never intended that this slide would fall into the hands of people like me. It just happened by accident and by leak that this came out, because they don't ever disclose this. But the language here is fascinating because they're talking about allocation of profits. In other words, how will wealth be shared? That's what capitalism is all about, making profits. How will wealth be shared? Operating entities entitled for normal profits, whatever that means. Operating entities means the places where the wealth is created, where the activities are happening. Hub entities entitled to residual entrepreneurial profits. Hub entities in this case meaning the legal structures we create offshore in tax havens. They call them low tax jurisdictions. In most cases it means no tax. Yeah, the question at the back.
I'm not asking you about this, but...
In that case, if you've got a general question, can you leave it till later?
Yeah, sure. I've got 9 questions so far as well, but I really want to hear this.
Is it a question relating to what I was discussing earlier on?
Really clear. I mean, you said, do you want to continue?
Yeah, go.
Now, if you're continuing, that seems to be what you're doing. What I was going to suggest was, can we ask whatever questions we've got until now, and then you continue after that?
Yeah,
I'm afraid that if you listen to all my 9 questions, you won't get through the rest of this, and I'd really like to see if that's covered.
Yeah, you might find, because I'm going to be covering quite a bit of material, I was getting a bit sick and that's the sound of my own voice, but you might find that some of the questions will be covered in what's coming next.
Right, okay, so you're going to continue, yeah?
Yeah.
Right, okay.
Okay. I want to take you through a case study which I investigated with the Guardian newspaper a few years ago. And the context of this is quite simple. Oxfam, which I used to work with a long, long time ago, asked me to make the links between trade justice and tax justice. Simple as that. They were working on trade justice and particularly on fair trade. And I said, okay, well, let's take an example of an iconic fair trade item and look at what happens to that fair trade item in paper as it's traded across the world. And this Guardian article, which ran to 3 full pages, you can download the entire article if you just Google tax justice goes bananas, was the first really serious newspaper investigation into how multinationals use tax havens for tax avoidance purposes. And we use bananas because they're so iconically fair trade. And I had an insight on this one because I'd actually helped set up the structure in the first place. So I'm going to show you how bananas are traded on paper within one company. Everything that follows happens within one company and its subsidiaries. What is truly astonishing about this is that everything that they did was perfectly legal. The word legal causes me a lot of problems. But anyway, the existing global rules set by the OECD allowed this company and virtually every other company in the world to do this kind of monkey business. So the bananas themselves are traded into Britain directly by ship straight into the retailers. But the journey on paper is fascinating. Imagine we're talking about £1 worth of bananas. You go to the corner shop now and buy £1 worth of bananas. And by the way, all these figures were confirmed by the company involved. They had the opportunity to review the work. Of that pound, 13 pence remains in the producer country. In other words, 13%, of which 1.5 is labour costs, 10.5 production costs. 1% tax of the total £1 is taxable profits retained in that country where the tax rate is approximately 30%. So that's approximately 0.3 of a pence of tax being paid there. Okay? The company exported to its own subsidiary in the Cayman Islands, where it charged itself for the use of its own purchasing network, an intellectual property right. A nonsense, really, a complete fiction, but a perfectly legal fiction. They charged themselves 8 pence for the use of their own purchasing network. They then charged themselves 8 pence for the use of their own financial services based out of Luxembourg. Now, Cayman Islands doesn't charge any tax at all on profits booked there, and Luxembourg doesn't charge any tax at all on it. Then charged themselves for the use of their own brand. Now, for those of you who go out and buy, let's say, go to your grocery shop and say, I'll have 1 kilo of Dole bananas, my good man. You're very unusual, because the only brand that matters in the world, the only brand that any of us pay any attention to, is actually the fair trade brand. We buy fair trade bananas because we want them to be fair trade. By the way, the Fair Trade Foundation didn't take any account of this. Anyway, they charge themselves for the use of their own brand, and to demonstrate to the taxman that's legitimate, they then stick a label onto every single banana, which is why we have this ridiculous situation of all our bananas carrying little labels. They then charge on to the Isle of Man, another subsidiary, for the use of their own insurance services, on to Jersey for the use of their own management services. Now, this was fascinating because I made a television program with a French TV program thing, and we went to Jersey because Jersey is now, notionally on paper, one of the biggest exporters of bananas to Europe. So we went to Jersey looking for the banana plantations, and it was a jolly wheeze going around. But what we did discover, and this is the crucial thing, which was, and we knew exactly what we were looking for, we discovered a little dusty office in a little trading estate in the north of the island, which had the company's name as a brass plaque outside. Looking through the windows, we could see the Amstrad computers. This is 2 years ago, Amstrad computers. It was just so quaint. I hadn't seen them for decades. And importantly, the guy in the office next to it, who was a local photographer, said, "Oh no, there's never been anyone there. It's completely empty. Look inside the fridge." So we opened the fridge, which was switched off, and there was a jar of pickled onions that had gone out of use back in 2007. So clearly, the whole thing was a sham. But they charged 600 million a year for the use of that sham. That gives you some idea of the scale of these shams. That's just one company. And then on to Bermuda for the use of their own distribution network. Up to you to decide what the difference is between a distribution network and a purchasing network. But clearly, do the maths and you'll see that half of the price that you paid in the shop has actually been shifted offshore to legal fictions, legal companies, which are totally fictitious in their activities, and that astonishing amounts of profit have been moved offshore. Now, what applies to this company, Geest and Dole and Chiquita, applies to virtually every other company in the world. I'm going to whiz on a little bit and then finally it goes on to the consumer, onto Britain, where the retailer charges their markup, and there's 1% of taxable profits left in this country. Can you see how wealth is accumulating offshore, untaxed? This is not that different from what Amazon does, Starbucks does, and so on. Do you all understand this? And this is what's called profit shifting. The point is that if a big transnational company can do this, but a small local company can't, because obviously they can't pretend that they have their purchasing network offshore, then you create a massive market distortion which favours the big companies, the transnational corporations, and completely wipes out the local coffee shop or the local greengrocer or the local producer. And that's why globalization has become this massive failure, which has also allowed huge volumes of wealth created in countries like Britain to be shifted offshore and not taxed. Conscious of the time, and I've been going on, what's the problem? Is it a lack of legislative clarity in producer and consumer countries? Well, up to a point. Is it a lack of enforcement capacity in under-resourced tax authorities? Certainly that's the case. Is it a case of aggressively and well-resourced companies, the non-taxpayer? Yes, it's that. Is it the case that the rules and guidelines are simply impracticable? It's all of those things. In other words, globalization, the rules underlying globalization have completely failed in this area, completely and utterly. And that's been recognized. So just in case you think we took an exceptional example in that banana company, we didn't. Here's the Financial Times looking at the top FTSE 100's top tax haven country. If you look at the FTSE 100 companies, they have 8,492 separate legal entities established in tax havens to do what that company, the banana company, was doing. And the favourite ones are Delaware in the United States, Netherlands, Republic of Ireland, Jersey, Hong Kong, blah-de-blah. So this is actually systemic right the way through globalized capitalism. I hope I've made that case loud and clear. And here's Joseph Stiglitz arguing the same. And that's why it's so crucial that we tackle this. I don't have time to go through all of this stuff, I'm sorry, but I will talk very quickly about how this harms development. And then I think I might knock it on the head and open up to questions. But this, sorry, the jargon is, the OECD since the 1960s have said that their mission is to avoid double taxation. In other words, to ensure that capital doesn't get taxed twice on its profits in one country compared to another. It never occurred to them that there might be a problem with double non-taxation. In other words, that the companies might be dishonest and might end up booking their